Hey, what's up everyone? This is Dudediligence here, and this is also cooking time. You see, today we're cooking some bok choy with, you can see this, we're doing some Hainan chicken, and then we're gonna do Hainan chicken with noodles, and with these delicious shiitake mushrooms, okay? And but this is not a cooking channel, so as I'm cutting stuff, we're gonna talk a little bit about, the market. So first of all, you guys have to understand that, okay, so the British government or the British central banks already increased their interest rate. So what is that supposed to mean? If the British authority already increased the interest rate, well, technically speaking, their interest rate was zero, right? Or a majority of the Europe, especially in the European Union, a lot of their interest rates are actually negative. So they're getting their interest rate positive now, and then even getting more than positive. That actually sends out a signal that's saying that, okay, inflation is not just American thing, inflation is a global thing, and then they're trying their best to ease the inflation in a way that they think that might fit. And then the U.S. government, or more like the U.S. Fed, is going to do the same thing in the next coming month. And then those signals are essentially disturbing the market, telling everyone who's trading on the market that, hey, most likely interest rates is going to increase sooner than you expected, right? The projected time is going to be March, but it's probably going to be earlier than that. Some people are saying it's just going to be the next Fed meeting. This is why we see a lot of volatility in the market. As you know, the VIX spikes up and down, traded flat for a little bit, drops down and go up again. It's just really, really volatile. So for those of you who are here, just want some, recommendations, not really recommendations. We're not financial advisors. We do not give financial advices, right? Everything we say on the channel is for shits and giggles. But if you really want to know what we're going to be trading in the next few months, here are a rundown of the list, okay? So first of all, we're going to be trading and probably longing. Longing means I will be monthly long or half a yearly long bank stocks. So a prime example of bank stock would be JPM, those big names, Wells Fargo, WFC, Citibank. Citibank will actually be a very interesting choice here, because they technically have the most branches in the United States, but they also do not have as much customers. But Bank of America does, right? So big names, Bank of America, Wells Fargo, JPM, you can just ride the waves a little bit more. Another thing that we should be trading or highly concentrated or paying attention to is the energy market. So whenever before a huge market crash, the energy market becomes the most volatile segment of the market, okay? I'm going to turn down the fire a little bit. So if you go look at the 08 crashes, you actually will figure some very interesting phenomenon there. You realize that, hey, like coincidentally, the oil just spiked way before right before financial crisis happened. Why is that? Well, we're gonna explain why is that in a more detailed video. And for those of you who have oil-related questions, you should join Discord. We have Bronco in our Discord, who is a seasoned oil consultant who's been doing this for more than 20 years. And I've been thinking for him because he has really deep voice and all that kind of stuff. Because in order to get hot chicks, you gotta get deep voice, and then in order to get deep voice, you gotta listen to deep voice people talking all the time. So that would be a primary focal point. And another primary focal point would be the general ETF market that's centralized on inverse index funds like SQQQ, UVXY, and some of you might know SPXS. That's also a really good one. But the thing is, if you were trying to actually short the market, you probably shouldn't play snapshot calls, and you shouldn't play let's just say like today it goes up and goes down and you're trying to day trade that thing. It's probably not going to work. Usually the profitability period of time, if you're holding an option or just holding a stock, is around like a month, more than a month-ish, because in a monthly segment, a lot of things sort of adjust. It doesn't really adjust daily on the shorting market side of everything, okay? Another thing is, you can actually, if you were looking to longing a stock, you can actually long a lot of utility or consumer utility stuff. Like AT&T, I think would be a good one. Verizon will probably trade flat as it is, because your phone, you still have to pay for your phone bills no matter where all the inflation is gonna go, right? And if they can steal some of other people's customers, then it will be great. The earnings will be great. And I honestly don't think the tech bubble burst is not going to be like the sudden bubble burst like what happens in Y2K, even though the entire market operates like that. So if you are just trying to buy puts on a weekly basis, you might lose a lot of money without good reasons, okay? And for those of you who are here for just small cap stocks like BBIG or MMAT, I can tell you very honestly that they're not going to perform as strongly as they did before. And for those of you who are just interested in AMC or GME content, again, meme stocks are going to struggle in 2022. So this is it for this video, and I'll probably just name it the future of 2022, or how do you trade in 2022.